Hi everyone. This video is a part 2 and supplemental video to an hour-and-a-half long video essay discussing the shortfalls of online investigative journalism. If you'd like to watch that video and are interested in learning things you'll likely never use in your real life, you can find it in the description below. In my first video, I took a deep dive into the research and evidence regarding allegations of embezzlement and missing money levied against the Open Hand Foundation by the YouTubers Karl, Jobst, and Mutahar from Some Ordinary Gamers. That video went into the depths of hell discussing how their accounting calculations were incorrect and lacked any application of tax accounting principles. Their receipts and evidence were sourced from the internet, which is not a reliable place to locate financial information, and their overall research was subpar and lacked substantial effort and understanding. Again, if you'd like to hear all about that, the video is in the description below. It's the only other video uploaded to this channel. This video will be addressing one aspect of their investigation that I really wanted to tackle in the first video, but I didn't want to make it any longer than it already was, so I'm making this much shorter second video to give it the attention that it deserves. In Karl and Mutahar's original videos discussing the allegations of embezzlement and missing money, they both asserted that they believed that money was being siphoned from specifically the golf event. Just as a quick caveat, Karl asserted that the money was being embezzled, and Mutahar asserted that the money was missing. So that's what I'm referring to when I say the phrase embezzlement and missing funds. I say it a million times. Like I said before, if Open Hand were stealing money from the golf event, or they didn't properly record all of the revenues from the golf event, it would be very easy to discover, and that's what this video is going to address. In order to understand this, there are two topics that we're going to cover. The first topic I've decided to call check assignment and signer authorization, and the second part will be a discussion on the cash basis method of accounting, which is something I brought up in the original video. After going over these two sections, we're going to combine what we learned in them and apply it to what it would specifically look like if Open Hand was stealing money or had missing money related to the golf event. Let's get into our first discussion on check assignment and signer authorization. One thing we know about the golf event is that the payments are made via check, directly payable to Open Hand. Karl and Mutahar didn't refute this in their original investigations, so I won't be doing so here either. I'm confident that everyone already knows what a check is and what they look like, but I'm going to take just a minute to discuss the information withheld in them because it's important to the overall discussion. It's at least important because a check leaves a very clear paper trail of money being drafted from one account and being deposited into another. And if money was stolen via a check, it would leave this obvious paper trail within each bank account that was affected. So a check is also sometimes referred to as a draft. It's a request from one bank to another to allow a draft of money from one person or organization's account and deposit it to the person or organization named on the check. While the check doesn't have a whole lot of words on it, it does still say a lot. It's saying that this person or organization has a bank account at this banking institution and this is their account number. Using this bank information, please draft this amount of money from the account and deposit it to this person or organization's account as of this date. This person has signed and authorized the draft of these funds. Simple enough, so we move on. The payee of the check, or the person who is trying to deposit the check, is the bearer of something called a negotiable instrument. A negotiable instrument is an unconditional promise or order to pay a fixed amount of money. However, as the name suggests, this instrument can be negotiated, or a better term is assigned, to someone else's possession. So if I had a check for $100 and I owed you $100, I could negotiate the ownership of the check from me to you to satisfy the debt that I owe you. To legally assign a check to someone else, the person it's made out to needs to sign the back and write something to the effect of pay to the order of, along with the name of the person they're giving it to. It would also likely include both signatures of the original owner of the check and who it's being assigned to. This effectively transfers the ownership of the check from you to them. That's a quick synopsis of check assignment. Now let's quickly discuss signer authorization. Signer authorization typically refers to the official process by which an individual is legally authorized to sign documents on behalf of another person, group, or organization. When it comes to my bank account that I personally own, I am the only legal signer of the account. Only I can assign money owed to me to someone else through my signature, and only I can authorize drafts from my account to be paid to someone else with my signature. I've not granted that authority to anyone else. With regards to nonprofits, signer authorization is something that is governed and decided by the board of directors. Not all board of directors are granted this authorization. I'm pretty comfortable saying that most board members do not get this authority. The individuals who do get it are the only ones who are able to sign checks on behalf of the nonprofit. This includes the signature required with the assignment of checks and the signature required when checks are made payable to vendors. Unfortunately, we don't know who has signer authority with respect to OpenHand. It's very commonplace that at least the president and treasurer have signer authority, but others can be given it as well. However, a check assignment from a private foundation, like the OpenHand Foundation, to another individual doesn't work the same way as I just described above. In fact, it's likely illegal to even do this. As stated earlier, Karl, Mutahar, and myself agree that the golf event checks are being made payable to OpenHand. That means that OpenHand bears ownership to that check. When Karl and Mutahar say that they believe that money is being embezzled or money is missing from the golf event, a check assignment is one method of how that would happen. They're implying that the checks that are made out to OpenHand are not being deposited to OpenHand's bank account. They are potentially being assigned over to someone else and then must be deposited to a different account. If this were happening, there would be an extremely clear paper trail, and it would be trivially easy to catch. Whatever federal agency would be responsible for investigating this, all they would have to do is reach out to any of the sponsors of the golf event. Let's take Pepsi, for example. The agency would reach out to Pepsi's accounting department and ask, hey, did your company take part in the 2000-whatever PBD West Convenience Cup Challenge? We're investigating allegations that some of your money may have been embezzled or had gone missing. Could you send us a check stub or support that will confirm the specific check you made payable to OpenHand? They would then take that check support and try to match it to OpenHand's bank transactions. If they went through their bank statements and found that Pepsi's check wasn't deposited to any of OpenHand's bank accounts, then OpenHand would be in really deep shit. It's very possible that they wouldn't stop there. The agency would likely investigate who has signer authority for OpenHand and would look into each one of their personal bank accounts to find out what account this check was cashed to. It's possible that this agency could work with Pepsi to find out what account their check that they made payable to OpenHand was cashed to. Remember, only people with signer authority have the ability to assign checks made payable to the nonprofit to somewhere else. This is likely illegal, but we'll get to that shortly. If they found that the check was deposited to anyone's account other than OpenHand, there would be some serious red flags raised, and OpenHand and that individual would be in really deep shit. Again, if there was any money being diverted from OpenHand to someone else, it would be extremely easy to catch because of the clear paper trail left behind from the original check drafted by any one of the sponsors. Not to mention, this type of behavior seems to violate many state and federal laws. As a reminder, if you didn't see my first video, I am an accountant and I am not a lawyer. However, I did speak to a lawyer regarding this specific situation, and they had a lot of good information for me. Here is what they said word for word. Quote, in California, the Uniform Commercial Code, or UCC, governs commercial transactions, including negotiable instruments like checks. Under the UCC, a check made payable to a nonprofit is intended for the nonprofit's benefit. A board member assigning such a check to themselves could raise issues of breach of fiduciary duty. Board members have a duty to act in the best interest of the nonprofit, and diverting funds for personal use may violate this duty. Additionally, California law requires transparency and accountability in nonprofit operations. The Attorney General oversees charitable organizations to ensure compliance with state laws. Misappropriation of funds by a board member could lead to legal consequences, including potential civil or criminal liability. Under California law, a check made payable to a nonprofit belongs to the organization, not to an individual director, and a board member who endorses or assigns that check to themselves breaches both a civil and potentially criminal duties. The core civil standard is found in the Nonprofit Public Benefit Corporations Law, Corporations Code number 5231, which requires every director to act in the best interest of the corporation and prohibits self-dealing unless the transaction has full board approval under the Conflict of Interest Safe Harbor in Code 5233. Unilaterally diverting corporate funds for personal use violates those sections and opposes the director to personal liability, restitution, and removal under Code 5223. If the organization is a private foundation, federal law adds a second layer. Internal Revenue Code number 4941 imposes excise taxes on self-dealing between the foundation and an insider such as a director. On the criminal side, taking charitable funds for personal benefit can constitute a misappropriation of funds under Penal Code number 506, embezzlement by a fiduciary, or when public or charitable trust money is involved, Penal Code number 424. Either offense is a felony punishable by imprisonment and restitution. In short, no provision of the Uniform Commercial Code overrides these fiduciary duties. A board member may sign a nonprofit's checks only to pay organizational expenses approved by the board, never to redirect the payment to themselves. End quote. That was a lot to take in, so listen to that again if need be. But if any board member of OpenHand were diverting funds from the private foundation to their personal bank accounts, this would breach their fiduciary responsibility to act in the best interest of the charity, which comes with its own legal ramifications. Also, if the board, for whatever reason, voted to divert the funds from the nonprofit to someone else, this is still considered a misappropriation of funds, otherwise known as embezzlement, as laid out in Penal Code 506. To take it a step further, these actions could also violate Penal Code 424, which states that those officers or those entrusted with public funds who misuse them can be held liable. Specifically, it prohibits officers from appropriating, loaning, or profiting from public money without proper authorization, as well as keeping false accounts or concealing information. To my understanding, proper authorization can only come from the members of the public who contributed those specific funds, and I think it's safe to say that no one from the public authorized OpenHand to take their contribution and line their own pockets. It seems like OpenHand would be culpable for a lot more than just embezzlement or missing funds, and I'd honestly love to hear a legal expert divulge these complexities further. If OpenHand were stealing money from the golf event or had unaccounted money from it, one of the ways they would accomplish this is by taking the checks entitled to OpenHand and assigning it to themselves. Karl and Mutahar never presented this type of evidence in their original investigations, so this can't be confirmed. If this is something that OpenHand was doing, it would be easy to catch due to the clear paper trail, which all started from the check that the sponsors make payable to OpenHand. This isn't the only method that OpenHand could have employed to potentially steal the golf money. There is one other method, but again, there would be a paper trail. I very briefly talked about accounting methodologies in my original video, but we're going to take a deeper dive here and tie the basis that OpenHand uses into the allegations levied against them. An accounting method helps the organization and others determine when revenues and expenses should specifically be recorded, or a better word to use is when they are earned. Let's discuss the two most common accounting methods used, the accrual method and the cash basis method. This can be explained using just one simple example. Let's say that I own a cleaning company, and I've been contracted to clean an office on December 30th. I arrive at the office on that day, perform my duties, and on my way out, I leave an invoice dated December 30th in the administrative office. Let's assume the office has New Year's Eve and New Year's Day off, so they arrive back on January 2nd. On that day, they find the invoice, they cut a check, They get it signed, and they hand deliver it to my cleaning company's office on January 2nd. I then take that check and deposit it into my company's bank account on January 2nd. Under the accrual method of accounting, revenues and expenses are recognized in the period that they were incurred. In the above scenario, assuming my cleaning company followed the accrual method, we would record revenues on December 30th, even though we were paid on January 2nd. Under the cash basis method, revenues and expenses are recorded when the cash actually exchanges possession, so when it's directly received or paid out. And it doesn't consider when the services were rendered or the goods were exchanged. In the scenario above, my cleaning company would then recognize revenue on January 2nd, as that's the day I was paid. Pretty simple to understand. So now let's relate this to OpenHand. We can confirm from every single tax filing that OpenHand prepares their tax forms using the cash basis. This means that every single dollar that was deposited or withdrawn from their account needs to be accounted for and recorded in this tax filing. This is important because the change in their net assets, meaning the revenue minus the expenses, needs to exactly equal the change in their cash account. One cool thing about cash basis accounting is you don't need to always rely on an accounting software to track your business transactions. The bank statements themselves can verify the money going in and money coming out. The bank statements almost act as a general accounting ledger under the cash basis. They're not always one-to-one, but they are extremely close. Now that we understand this, let's relate this to OpenHand and to the idea of how simple it would be to catch them stealing money from the golf event or hiding money from the golf event. In the first scenario, I explained that if OpenHand were stealing money from their golf event or hiding money from the golf event by assigning checks made payable to OpenHand to someone else, it would be really easy to find due to the paper trail left behind. Let's assume for the second scenario that they cannot do that. What would it look like if they were then siphoning money from the golf event? OpenHand would first have to deposit the check made payable to them to their own bank account, creating a recorded transaction at their bank that would forever exist on their bank statements. They would then have to request a withdrawal of sorts, either by an electronic funds transfer or an EFT, a wire payment, or a check that would go to a separate bank account not linked with OpenHand. This would create a second recorded transaction that would forever exist in their bank statements and records, as well as create a record of the transaction with the account that the money was transferred or deposited to. Do I really need to explain how easy it would be to catch this happening? If an agency looked into OpenHand with the intent to investigate allegations of embezzlement or missing money, this is one of the things that they would stumble upon. It would not be hard to find. They would be able to see the money being deposited to OpenHand's account, and then the second transaction of money going to a different bank account that isn't a payment to a vendor. And OpenHand's bank would have the exact account information regarding what bank and what account received the money, and then they'd be able to determine who was the owner of that account. Again, do I need to explain how simple this would be to discover? There is an obvious transaction trail to follow here. Not only that, this second disbursement of funds would need to be recorded in their federal tax filing as some sort of an expense. Any tax accountant who would stumble upon something like this would easily sound the alarms without a question. No professional accountant is going to risk their entire career by covering something up as stupid as this. Additionally, this disbursement from OpenHand's account will have to be recorded in their actual accounting records. Not only would money being deposited to a board member's bank account from the private foundation sound the alarms, OpenHand would potentially have to create a fake vendor in their accounting software, create a fake invoice, and fake pay it. However, all of this information would be investigated, and any auditor or reputable agent would be able to discover the fake transactions. They'd be able to discover whether the vendor the money was paid to is real or not via their employer identification number. If they used a real vendor, the agency could just contact them individually and ask if the invoice in OpenHand's system is real or not, and if it weren't, then OpenHand would be in really deep shit because they would be falsifying documents. If OpenHand was doing this, they would be culpable for committing the exact same crimes we just mentioned 5 minutes ago. With Karl and Mutahar stating that they believe the golf money is either being embezzled or is missing, they are implying that OpenHand is either assigning the checks made payable to OpenHand to someone else's personal bank account, or they are implying that OpenHand is depositing the checks to their own account and then dispersing a separate amount to someone else's own personal bank account. Again, there is a paper trail, and this would be very easy to catch. You're allowed to come to your own conclusions, so go nuts. But if this is happening, why haven't we heard anything in over a year and a half? Karl and Mutahar's original stories came out at the end of 2023. How is OpenHand still able to host golf events in both 2024 and 2025 if this was happening behind the scenes? Truthfully, there isn't a single scenario where OpenHand could take money from the golf event where there is not a clear paper trail that would lead to its discovery. This is no longer in the hands of anyone from the public or any YouTuber. The agencies responsible for investigating these types of cases will take it from here, and we will all know within due time whether Karl and Mutahar's allegations carried any weight. Hope you learned a thing or two.